Price relative compares the performance of one security to another with a ratio chart. It can be used to compare the performance of a stock against a benchmark index like the S&P 500 or the NASDAQ Composite. And it can be used to compare a stock to its sector ETF. Chartists can use the price relative to compare the performance of a stock to its sector or to its industry group, making it possible to determine if a stock is leading or lagging its peers. Price relative can also be used to find stocks that are holding up better during a broad market decline, or to find stocks showing weakness during a broad market advance. Now, one way you can use price relative is to compare the 9 sectors of the market to the performance of the overall market, or the S&P 500. Okay, first let's take a look at this particular area on the S&P 500 chart, where the chart pattern is a bearish head and shoulders, with the head here, the left shoulder here, the right shoulder here, and when it broke below neckline support in this area on this day, it gapped down, it fell hard, did a little oversold rally, then another gap down, and then another little rally. So remember the chart pattern: the gap down, the rally, the gap down, and the rally. And we'll take a look at the other 9 sectors to see if they look similar to this area on the price action. So now let's go ahead and load up price relative. Now the first thing you will do is bring up whatever stock or sector or ETF you're interested in comparing the S&P 500 to. So let's start with the first sector, which is XLY. That is the Consumer Discretionary ETF, or SPDR. Okay, now down here in the chart attributes area, click in the indicators box and then click on price. Now it will always load the S&P 500 as a default. And to compare XLY to the S&P 500, type in XLY and then a colon. The colon creates the comparison. Click Update. And as you can see, XLY is outperforming the S&P 500 here. It's basically running flat with it here. And when price relative goes up, that means whatever ticker you have here is outperforming the S&P 500. When the line of price relative goes down, that means that XLY is underperforming the S&P 500. So right here, it looks very strong. Like right here, there was resistance and it broke out above it. That means that XLY was outperforming the S&P 500 by quite a bit here. Okay, now the highs, right here, the high's a little bit higher than back here, and it looks like it's trying to break out to new highs above resistance here. And if it does that, that means that XLY will be outperforming the S&P 500 by quite a bit. Let's go on to the next sector, which is XLP. That is Consumer Staples SPDR, or ETF. And as you can see, the chart pattern doesn't look anything like the S&P 500, other than when it broke down through a double top right here. That was the lowest close in this entire area. It gapped down. There was your first bounce. There is the second gap down to new lows and the second bounce. So this looks very similar, except that's a double top instead of a head and shoulders. But the reading on price relative is almost at a low, because where it is right now is much lower than where the S&P 500 recovered. So the distance from the top to the bottom and then the second bounce is much lower than what the S&P 500 did. Okay, the next sector is XLE, or the energy sector, and it's showing some strength here of late. Again, the chart pattern is a double top, not a head and shoulders, and when it breaks through neckline support here, it falls hard. But it does one bounce, and look at how high the second gap down is. Okay, the second gap down on the S&P sent it to new lows, whereas this one didn't even break the first low. Okay, and we're also right now into the second bounce. So a break above right here at 83 would be very bullish, and a break above this high right here on price relative would also mean that energy is outperforming the S&P 500 by far. Now for the XLF, or the financial sector. Okay, right here it outperformed the S&P 500 by a lot. And in this range, it pretty much was right with it. But at this point right here, when it broke above all of this resistance, that was very bullish for the sector. Okay, it also formed a double top, not a head and shoulders like the S&P 500. Here's the first gap down and the drop with the first rally. The second gap down to new lows and the rally. So this looks very similar, but through this entire period, the overall trend for the financials is to underperform the S&P 500. Now for XLV, which is the healthcare sector. And again, it's looking very strong right here. Holding up well. If it breaks above resistance here, that would be very bullish for the sector. As you can see, it has recovered, a little bit higher than where the S&P 500 did. There was no real chart pattern here. That is a slight double top with the first gap down, the first bounce, but the second gap down was not as severe as the second gap down on the S&P 500, and there's the second bounce. So right now it appears to be overperforming or outperforming the S&P 500 as a whole. The next one is XLI, or the industrial sector, and it also is showing some real signs of strength. This chart pattern shows the head and shoulders with the head here, left shoulder here, right shoulder here, the first gap down, the first bounce, the second gap down to new lows, and the second bounce. But basically right through this area, it is outperforming the S&P 500. The next sector is XLB, or the materials sector. Now right here it underperformed, but ever since right here it has been outperforming, because look at this high. This high is much higher than anything the S&P 500 could pull off, and so is this one. So it is much higher now relative to the S&P 500. Okay, a break above resistance here would be bullish for this sector. The next sector is XLU, or the utility sector. And so far, it is the worst performing sector out of the 8 I've shown you. It is breaking down to new lows today, below all levels of support. This close right here was the lowest close in this area, and if it closes below it like it looks like it will here today, that is very bearish, and breaking below support on the price relative would also be very bearish for this sector. And the ninth and final sector is XLK, or the technology sector. And from this point here to up here, it looks like it was outperforming. Okay, but here is, that's because this high here does not show up on the S&P 500 chart. This area right here was actually the second, or the right shoulder of the head and shoulders, which was lower than the head. So right here it was outperforming by far. Okay, now it appears to be underperforming. There's the first gap down and the first bounce, the second gap down to new lows, and it's not bouncing. It tried for 2 days, and it looks like it might close below this close on this day, which would be very bearish for the sector, and breaking below support would also be bearish. Now you can also compare individual stocks to the sector they belong to. Let's load up Yahoo, ticker symbol YHOO. Okay, then down in the chart attributes area, it is a part of the XLK, or technology sector. So type in Yahoo :XLK, hit update, and as you can see, Yahoo broke out to new highs here above all levels of resistance here. And that means it outperformed its sector, the technology sector, by far. Now, through this period, it was basically moving flat with it, but it looks to be like if it can break above resistance here, here, and here, that price relative should come close to this old high here, which will be pretty hard because that was an earnings report. But breaking out to new highs for price relative of Yahoo compared to the technology sector would be extremely bullish for Yahoo. Price relative also allows you to compare stocks against other stocks, whether they're in the same sector or not. So let's compare two of my favorite stocks in the technology sector, Yahoo and Akamai. So scroll down into the chart attributes area and load up price. You will type in Yahoo AKAM for Akamai and click update. And here you can see through this entire period that Yahoo was outperforming Akamai. Now Akamai had an earnings release on this date and it gapped up $4 or $5 at the open the next day. Therefore, Yahoo became seriously underperforming compared to Akamai. And then after Akamai settled down and pulled back a little bit because it had gapped up very big at the open the day after earnings. Right here, Yahoo broke above some areas of resistance and started to outperform Akamai. And then in this area, they performed very close together until Yahoo broke above this level of resistance and started to outperform again on its huge volume day and its great earnings call. Okay, that was too far too fast, so it pulled back. Then it was showing underperforming. And throughout this entire period here, they're about running flat or the same amount of performance. One is not outperforming the other.